for more on one particular region, Latin America. We're joined by the BlackRock portfolio manager, William Landers, who oversees $10.5 billion in assets at BlackRock and also heads BlackRock's Latin America fund, which has $1 billion of that $10.5 billion, I guess you could call it. Will, great to have you here.
Thank you.
In the studio in particular. And you've got about, I think, 70%, right? You said 72% in Brazil and the rest pretty much in Mexico. However, you said that there's a valuation problem going on in Brazil right now, right? Are stocks getting too expensive? Is that driving you away?
No, I think the comment that I made was on the IPOs, the valuations are getting a little too expensive.
Okay.
The market overall is trading less than 11 times 2011 earnings. So it's still one of the cheapest markets.
Incredibly, right?
It's still one of the cheapest markets you're going to find in the world. I just spent 10 days in Brazil, got back yesterday.
Okay.
And you wouldn't know that there's any trouble when you go there. I mean, clearly there's pressure on costs, pressure on inflation, but we already have the central bank having moved rates to the highest in the world, almost 12% nominal rate.
But they're having problems tackling their inflation, though, don't you think?
But it's a 6% inflation rate. When we compare it to India at 9, Russia at 10, we have to put this in perspective. Clearly, the central bank needs to continue to work to bring inflation back to the 4.5% target. But we're talking about 150 basis points difference on the annual inflation. When I was growing up, we had 2-3% inflation a day. So things are a little bit different now than they used to be.
But okay, on the valuation front, though, so IPOs. What's going on there then?
Well, I think there's just a disconnect between what the market is willing to pay for new companies and what bankers are telling companies that they're worth. It's always a battle, but I think it's become a little bit unhealthy right now because a lot of these deals are getting priced. I don't know why. You have to ask the bankers on that regard. We're doing our work. We're doing the same work that we always do. New company needs to be traded at a discount on IPO time because there's no track record. We don't know this company as well as we do the companies that we have in the portfolio today. But that's what we're dealing with. You had a different deal today, priced Arcos Dorados, which was priced above the range.
Right.
I didn't participate in that deal. I think it's expensive, but it got done and it got done very well, apparently.
I imagine that you can't participate in Brazil without participating, obviously, in some of their blue chips, right? You've got Petrobras in your portfolio, Vale as well. What's the next one? What's the next big blue chip rising in Brazil?
Well, you know, Itaú Unibanco has become one of the blue chips in the world in terms of their bank. Petrobras, Vale, big commodity companies. But you have several companies in the mid-cap area on the consumer side, which are becoming, very large companies. Hipermarcas comes to mind. It's a company that acquired several different companies and now became one of the major consumer stories in Brazil, also getting into the drugs area, OTC, right. Generics, all kinds of different things. And it's a company that has been built through M&A, but has been done very well. I think this is one of the companies that will be a winner in the next decade. Are you planning on
reallocating your portfolio at all? 70% in Brazil, about, what is it, 20?
About 17% in Mexico 17%? And then 10% in the rest of the region.
Okay. Are you planning on reallocating that at all?
No, I think my trip to Brazil showed that the consumer story is alive and kicking. The consumers are strong and employment is low. Rates have come up some, but the banks are still able to lend at much more affordable rates than they used to in the past. At a slower rate than last year, but still at a very healthy rate. And you look at the market again, 11 times earnings is a very attractive multiple. So I don't see any reason to be shifting out of Brazil at this point.
One risk, isn't it, in Brazil, is the fact that the government is involved still, has stakes, right, in a lot of these companies. They've got a majority stake, I think, in Petrobras, a stake as well, or an interest in Vale and others. How do you evaluate that risk, though, when you value these companies? Because they may dictate. I mean, I think on Vale's case, they want them, right, to get into steel. Or into steel investments that really don't generate great returns. I mean, they're kind of dictating things that may not be in shareholders' interests.
Look, what
do you do?
Obviously, you have to put that into your evaluation. You're going to pay a lower multiple for a company where you do have the concern about government interference. There's so many investments going on in Brazil. I mean, I had a meeting with Vale. They can't do the CapEx program that they have now just because it's so large and you do have some bottlenecks in the economy. So if the government really wants companies to invest, whether it's Petrobras, Vale, the steel companies, the beverage companies, they need to improve the rules of the game. They need to lower labor costs. They need to make the fiscal situation a lot more simpler so that companies will be able to invest more, and Brazil can grow at a faster rate than 4 to 5% without having the inflation scares that we're having today.
Okay, I know in Mexico you have a big stake, I think, or a pretty sizable stake in America Mobile, right? That's Carlos Slim's company. We had a story earlier out this week in Bloomberg talking about Grupo Televisa and how they want to get into the wireless market. I think they're going to buy like the third largest wireless carrier there in Mexico. But we always, when we talk about Carlos Slim, though, he's got this stranglehold on the Mexican telecom market. Is there anybody that can actually break that?
Look, Telefonica has been trying for a decade now or so to gain significant share of the Mexican wireless market, and they've been somewhat successful. but America Mobile still has a 70-75% market share. So it's hard for me to see that the Televisa used to sell combination will be a major player in the wireless business. But I think what they're looking to do is do a triple, quadruple play and be able to offer to their customers more than just video and broadband. It's not my ideal situation in my mind, but it is what they're doing.
Okay. Will, we're going to leave it there. Great to see you.
Thank you.
Thank you for stopping by. Will Landers, the BlackRock portfolio manager who oversees a total of $10.5 billion, $1 billion Latin American fund. And